Well, hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, just about 12 minutes to go for the markets to open, and 26,000. That's the milestone that we'll be keeping on our radar. Whether or not we manage to hit that level at open or not, that's the big question. Of course, we have been seeing markets consistently hitting fresh highs, and today, of course, is that crucial level to watch out for. But who knows if a bout of profit taking kicks in, the wait could only get longer. But of course, we'll find out at 9:15. Global cues are fairly positive. GIFT Nifty also hinting at a positive start, and lots of stocks in focus. All your stock related queries will also be in focus, so keep them coming in on our live feed. We'll try and take them up with our experts on the show. But of course, before we move any further, let's quickly take a look at the headlines at this hour. Wall Street rally continues as the Dow and S&P 500 close at record levels. Asian markets trade largely higher as People's Bank of China announces a slew of policy easing measures, including a cut in reserve requirement ratio by 50 basis points by year end. The GIFT Nifty is also indicating a start near that 26,000 mark. Gold prices set yet another record high driven by geopolitical tensions and the Fed's rate cut. Meanwhile, crude prices remain range bound with Brent trading around $74 a barrel. A recent SEBI study reveals 91% of F&O traders have lost a cumulative 1.8 lakh crore rupees between FY22 and FY24. Only 1% of the traders made a profit of over a lakh, while algo traders are making a solid profit over the same period. And SEBI clears MobiKwik's 700 crore rupee IPO proposal. The size is about one-third of what they had planned to raise during the first IPO attempt. Meanwhile, sources say NTPC Green Energy's IPO is likely to hit the street in the first week of November. Well then, let's quickly take a look at the cues for trade. The GIFT Nifty hinting at a start around that 26,000 mark, and after looking at yesterday's close, we're just about 60 points shy of that crucial milestone of 26,000. The Sensex as well marching towards to 85,000 mark. Broader markets outperformed yesterday with the small cap index actually taking the lead, 1% higher for that index yesterday. The volatility gauge, India VIX, jumped quite a bit, 7% to edge back near that level of 14. Nifty Bank as well, hit a new high yesterday. That's one pocket that was underperforming and has started participating, has reversed the underperformance. And of course, charts looking extremely good according to technical analysts. PSU Bank Index, that made a comeback yesterday, gained somewhere around 3%. Aside of that, if you look at the Nifty Bank Index, that index in fact has gained 3,000 points since September 11. And of course, it had gained for 8 straight days in a row. Realty, auto, these are some of the other sectoral movers, but IT continues to underperform. That was the only sectoral loser yesterday. Looking at the F&O Qs then, the put-call ratio fell to 1.42 vis-a-vis 1.5 levels in the previous session. And let's also take a look at the stocks that will be in the F&O ban list. Aditya Birla Fashion and Vodafone Idea. These two are the new additions. But there are some other stocks that will continue to be in the F&O ban. They are RT Industries, Biocon, Chambal Fertilizer, GNFC, Granules India, LIC Housing, Nalco, Oracle Finance, PNB. By the way, the QIP for PNB is also opened up, last night. So that stock will be in focus, and SAIL is the other one. And there's one stock that has come out of F&O ban, and that is RBL Bank. In terms of fund flows, foreign investors continue to buy into Indian equities. They bought worth a pretty meager amount of 400 crore rupees in the cash market, but domestic investors also bought 1,000 crore worth of stocks in the cash market. But of course, on that note, let me bring on board our guest for today. Joining me is Osho Krishan. Osho, great to have you on the show. Looking at the texture of the market and the fact that we are waiting for that crucial milestone of 26,000, would you expect us to cross that level decisively today, or do you think there could be some bit of resistance around that level, and there could be a bout of profit taking that could kick in?
Very good morning, Nandita. Firstly, thank you for having me at the show. Well, now coming to the bullish movement of Nifty that we are witnessing from many days. So Nifty is currently hovering around 26,000, and 26,000 being the crucial zone, because now 26,000 is the next psychological level where we are witnessing very strong call writing position. So that can act as a very strong hurdle for the bullish momentum from here onwards. But overall, if I have to say about the undertone, then undertone for our market is extremely bullish. But at the same time, the derivatives and technical parameters are also at a very overstretched zone. So I am not very much aggressively bullish in the market. I am still bullish in the market, but better to wait for some kind of dips to accumulate Nifty and benchmark and the bank Nifty. But from here onwards, also on the higher end, if I have to say about the sectoral or thematic moves, then there has been a strong thematical movement that has been gauging the strong momentum in the market. So looking at the overall sentiments, yes, it is a possibility that Nifty can test 26,000 by today's end, looking at the global market and undertone. But overall, I will still insist that people should wait for some kind of dips. If it happens, then it will be providing very strong opportunity to go long.
Right. What about the bank index A and the Nifty PSU bank index in particular? Yesterday made a comeback, 3% higher, but PSU banks have been, grappling with selling pressure with the likes of SBI also, under pressure. But yesterday made a good comeback. Also, PNB will be in focus. It has launched its 2,500 crore QIP. Of course, there is a green shoe option as well. If there is ample demand, then they will be raising further 2,500 crore rupees via the green shoe option. Looking at the floor price, that's at a discount of 2.1% or so, compared to yesterday's floor price. Yesterday's close price, I beg your pardon. So how would you trade into a PNB, and how is the setup looking like for the Nifty PSU bank index now?
See, overall, till now, we have seen a very strong rally on the private sector bank and the NBFC space. But from last trading session, there has been a turnaround in the PSU banks. So from here onwards, I can see some kind of strong reversal on the technical developments that has been happening in majority of the heavyweight counters like PNB, SBI. So these counters are looking very positive, or they are because they are they are hovering at a very strong support zone. So I expect that from here onwards, the PSU banks can see some kind of a strong momentum in the coming period. Although again, on the technical front, the overall zone of corrective phase still persists in majority of the PSU banks, but some of the PSU counters like heavyweight counters, they have started gaining some traction on the lower end. So I expect that from here onwards, there can be a decent upsurge that can be seen in PSU banks in the coming period. Now coming to PNB, then PNB has again seen a very strong movement in last trading session, but still on the technical front, it is hovering below the 200-day SMA and also the bearish gap. So immediately the 115, 114 is the immediate hurdle for the counter, but the time it breaches the zone of 115 on a decisive manner, we can see that there can be strong momentum coming in PNB also. So overall, these counters should be kept in the watch list. The time we witness a strong reversal, then one can start accumulating these shares for short to medium term time frame.
Okay, that's the view on PNB and the PSU banking lot as well. But NTPC, that's one stock that will be in focus. The green energy arm IPO, the 10,000 crore rupee IPO, is likely to kickstart in early November. That's according to CNBC TV 18 sources. A lot of road shows have been planned across India and abroad, which are expected to kickstart pretty soon. There are road shows planned in Mumbai, London, Singapore, and the US as well, among other places. NTPC Green, of course, is a 100% subsidiary of NTPC. But looking at the charts, although there is a lot of excitement around this IPO, in the last 5 sessions, we've seen, NTPC gain somewhere around 5% or thereabouts. And the last 1 month also, the returns have been a little muted because, of course, PSU stocks have seen, profit taking, and, they have been in a state of consolidation, so to say. But would you say that the consolidative phase that we had seen on some of these counters are, is kind of out of the way, and we could see another leg of up move? What is the chart signaling now for NTPC in particular?
See, overall, the counter NTPC has seen some kind of a strong consolidation in the last 5 to 6 trading weeks around the zone of 400 to 420. But in the recent period, we have witnessed a strong breakout above the zone of 422. So on the technical front, the consolidation breakout paves out a higher target of nearly 450 in the short-term period. So overall, the trend is very positive, and this counter has been maintaining the positive stature of higher highs, higher lows. So I expect that from here onwards, this counter has the potential. There will be gradual up move. It is not very aggressive. This counter does not give very aggressive kind of a move for intraday traders, but for positional traders or short-term investors, definitely we have seen a very strong breakout that has been backed by decent volumes, because in the past three trading sessions there has been notable increase in the trading volumes. So I'm expecting that from here onwards, 450 is the target that one can eye for in NTPC from short-term time frame.
Okay, that's the view on NTPC. But another stock that been focused today would be Firstsource. Its arm has acquired a UK-based company for $56 million, and the company will actually become a subsidiary of Firstsource Solutions UK and a step-down subsidiary of Firstsource Solutions. Now, the buyout is going to help in strategic expansion into retail vertical and to strengthen the nearshore multilingual capabilities as well. Some of these IT names have, of course, come under intense selling pressure. In fact, yesterday, if you look at the IT index, that was the sole loser sectorally, and mid cap stocks or even the large cap IT names have been witnessing correction, but not before seeing a very good up move. So how are you trading into this correction that is happening into some of these IT names, and especially the mid cap ones like Persistent, Firstsource? And due to this acquisition, do you think there could be some bit of a sentimental move on Firstsource in particular?
See, coming to the first query of FSL Firstsource, this counter have seen a very strong movement in the recent period. After a breakout above the zone of 200, there has been a very strong vertical rally towards 330, 340 odd levels. There has been some kind of consolidation in the last 2 to 3 trading weeks, but again, this counter is still hovering at the higher zone. So I expect that on the technical front, it is on the verge of giving a sloping trend line breakout, which comes around the zone of 328 to 330. The time it surpasses the zone of 330 on a decisive manner, again we can see continuation in the uptrend. While on the lower end, 300, 305 is the zone where we can see some kind of strong support for this counter. So overall, the technical structure is very positive and one should stay invested or can even look for fresh accumulation above the zone of 330. Now coming to the IT space, overall IT space, yes, there has been some kind of correction, but after the vertical rally that we have seen, these kind of corrections should be considered healthy because this will be providing opportunity to invest in majority of the companies. But again, talking for mid-cap IT companies, then majority of the IT companies are still in the consolidation phase at the higher level. So we are not witnessing very decisive correction. There has been sectoral rotation that is going on. So just movement from IT towards other sectors that is being seen in the market.
Right, of course, we've had the first ticks coming in. Of course, the Nifty has taken a breather, at least for now. 26,000 eludes us. We are above that 25,900 mark, although we did come off that level as well at the very first tick. But 20%, I beg your pardon, 20 points down on the Nifty. Sensex also down just about 100 points or thereabouts. Mid-cap index started the day on a positive note. The Bank Nifty also witnessing some bit of selling pressure, but it is a Nifty Financial Services expiry as well today, so entire financial pack will be in focus. But let's see what the metal pack really is doing. And why do I talk about the metal pack? Because China has announced a slew of measures, including to cut the 7-day reverse repo rate by somewhere around 20 basis points to 1.5%. In fact, China will also deliver another cut on reserve requirement ratio by 25 to 50 basis points, and this could happen by year end. So, of course, China 10-year bond yield fell to 2% for the first time on record. So, amid these developments, that will of course impact the demand for metals as well, which is why the metal pack is emerging as the top gainer at the current juncture. 1% higher for the metal pack, although the texture of the market is on the downside. Aside of that, look at the auto pack, that's also taken a breather. Banks, as I had already mentioned, down somewhere around 0.2%. Aside of the metal pack, if there is any other index that's holding out, it's the infra pack as well as the realty pack. Meager gains there, but still managing to hold out in the green. But aside of that, let's take a look at some of the movers on the index then. No surprises, all of the top three gainers are from the metal pack. JSW, Hindalco, Tata Steel, these are some of the top gainers. Aside of that, you had Power Grid also among the gainers, Hero Moto, Coal India, Tata Consumer, Divi's Lab, Dr. Reddy's, Tata Motors. These are some of the other movers. In terms of losers, let's take a look at some of the losers at this juncture. Hindustan Unilever, that's the top laggard, 1% lower, and Infosys, Wipro, HCL Tech, so all these IT names continue to see selling pressure. Cipla also the other one in the red, and Kotak Bank from the banking lot in the red as we speak. So FMCG, IT, these are some of the sectors that are under selling pressure, and so is the pharma pack, the likes of Cipla. Osho, looking at the open, let's first talk about the metal stocks. Good traction coming in, 1% higher on the metal pack, and among gainers you have the likes of JSW Steel, Tata Steel and Hindalco. What do you like from the metal pack at the current juncture? Would you stick to ferrous metals or non-ferrous metals, and how is Tata Steel really stacking up?
See, overall, the metal space have started gaining traction, and majority of the counters from the metal space, they are at their very strong support base. For example, Tata Steel was hovering around the zone of 200-day SMA and have started gaining traction. So, National Aluminium, Tata Steel, JSW Steel is an extraordinary, that has seen a very extraordinary performance with a breakout. But most of the counters from the metal space are at their very strong support base and have started gaining some strong traction. So I expect that from here onwards, there can be decisive upsurge that can be seen in metal space as a whole. And now there will be many counters that one needs to have a very selective approach, like for JSW Steel that has given a very strong breakout, and there has been a continuation on the higher end. So that can even also be on the flavor, because that has given a fresh breakout and it has been backed by decent volumes. So that counter is also looking very positive. But on the other side, companies like Tata Steel, which are also on the verge of giving a reversal, those counters are also looking very positive. So I'm quite bullish on the metal sector for the time being, and there can be various opportunities that can be provided in the whole space.
Okay, bullish on the metal space, and of course no surprises that metals are the top gainers given the fact that China has announced a slew of stimulus measures, and that's of course come as music to the ears for the metal universe. But talking about AstraZeneca, this stock is among, in fact, is the top Nifty 500 gainer. Of course, it has got the approval to launch cancer drug in India, and of course that has come as a booster. But looking at the charts, how would you really trade into it? Would you book some profits, or would you get into the counter today for a short term?
AstraZeneca is on the verge of giving a fresh breakout. So currently hovering around the zone of 72.40, 72.50 odd levels. But again, this counter is having or approaching its previous 52-week high. So I expect the time it gives a decisive closer above the zone of 72.50, then we can see a very strong movement in this counter in the coming period. So overall, the technical structure is very positive, and this counter has been hovering in the cycle of higher highs and also taking support from the 50-day exponential moving average, and again repeats the same on the higher end. So I expect the closer of 72.50 will be crucial. The time it gives a closer, or if today there will be strong traction above 7300, then that will be providing opportunity to accumulate this counter for higher target of nearly 300 odd points in the short term period. So near about 75 to 7600 can be seen as a target for short term perspective in this counter.
Okay, that's the view on AstraZeneca, but let's shift focus and talk about some of the viewer queries that are trickling in this morning, starting off with Nana Prakasam. He's sent in a query on Indian Bank. He holds 875 shares at the rate of 525 rupees a piece. He wants to know whether a short-term target of 600 is possible on the counter or not. 531 is where it's at, and as we spoke earlier in the show that PSU banks are under selling pressure. Although yesterday there was a good traction. But for Indian Bank in particular, 600 levels, do you think it's a little far-fetched at the current juncture, or do you think it could be a possibility?
See, in the short term, 600 is something that one should not eye for because there are immediate resistance in this counter around the zone of 570 and 575. But definitely, we are witnessing a kind of reversal from the 200-day SMA. So the stock was having a very strong support around the zone of 510, 515 odd levels, and from there onwards, we have started seeing gaining traction in this counter. So I expect that there can be a gradual up move in the coming period, but near about 560 to 575 is the zone which is supposed to provide very strong resilience for the counter. So once it breaches the zone of 575, then we need to review that whether it has the potential to retest 600 in short term or not. Overall, the technical structure on a broader time frame is very positive. So from medium term perspective, yes, this counter looks very positive, but for short term, 560 to 75 is the zone where one should try to book profits only if have a view of short term.
Okay, that's the view then on Indian Bank. But before we move on to other queries, I want to talk to you about an IFL Finance. There's been a shot in the arm, given the fact that RBI, has recently lifted the ban on its gold loan business. The stock reacted very, positively to that, of course. And today as well, the stock is trading in the positive, although no big moves right now. But we've had brokerage views on the stock coming in this morning. HSBC has upgraded the stock to hold. Target price has been raised to 540 rupees vis-a-vis its earlier target of 350 rupees, although the stock is somewhere around 515 right now. Of course, the business normalization is something that would be a strong tailwind according to HSBC. It has also upgraded the FY25 to FY27 EPS estimate by 6 to 16%. And of course, if you look at the stock price, it's up somewhere around 65 to 70% from March lows. And current valuations, according to HSBC, are pricing in most positives. But given the fact that the stock has seen a good recovery from March lows when the ban was imposed, do you think the news is already in the price in terms of charts? Do you see a fresh breakout, or do you think the leg of up move that it has seen in the last 6 months is pretty much done?
See, overall, I will say that there can be some kind of resilience that can be seen at current levels because the previous swing was obviously around the zone of 530, 35, and the counter has seen a kind of it has tried to give a breakout, but again has came down from the zone of 545 towards same 520 odd level. So this counter is having a very strong resistance around the zone of 530 to 35. Also on the technical front, the bearish gap is still unfilled. So I'm expecting that this counter should can be accumulated only once it sustains above the zone of 535 on a decisive manner. Then only one can look for opportunities on the higher end. Else, if there can be any kind of further correction towards the 200-day SMA near about the zone of 490 or 485 odd levels, then for short-term traders, it can be advisable to accumulate around the zone of 490 for a target of 535. That is a short-term view. But only once we see a decisive breakthrough above 535, then one can look for a trend reversal in this counter for higher targets of nearly 35 to 40 odd points. That will be 590 to 600 odd points can be seen in this counter.
Okay, IFL Finance. Before I move on to the next query, I want to just get in your thoughts on a Fusion Microfinance as well. Yesterday it was down 10%. Today again it's down 5%. Of course, there has been a profit warning. Additional ECL or 500 to 550 crore rupee worth of ECL may have to be made. Provisioning may have to be made in the second quarter. There has been a downgrade, on the stock as well. CLSA has downgraded the stock, and target has been cut to 260. The stock hit a fresh 52-week low today. Where would you really look for a support here?
See, overall on technical front, this counter is into a corrective phase, and there has been it has been making fresh lows on every time frame. So I expect that we need to see some kind of consolidation that where this momentum breaches, because on the technical front, this counter is already in the oversold terrain. So it is just the momentum and the news that is driving the market, that is driving the stock on the lower end. So I expect that the time where we see some kind of consolidation, then only one can see for a movement. But again, it is advisable to stay sidelines from this counter because overall the trend is very weak. Until we see a decisive reversal on the technical front, then only one can try to look for accumulating this counter. But for the time being, it is looking very weak, and it is not advisable to accumulate this counter at current price or even at lower levels.
Fusion Micro, I think it's an avoid from Osho's side. But Osho, taking up a query on Delta Corp, this one is coming in from Jamehat. He holds Delta Corp at the rate of 140 rupees. What should be the way forward? Should he hold, add more, or exit? At the current juncture, the stock is somewhere around 132 rupees or so. And it has seen somewhere around 3% kind of a gain in the last 1 month. But at these levels, should he accumulate or should he just stay put?
See, overall, this counter has not performed anything in the recent period, and also on the technical front or on a broader time frame. This counter is in a corrective phase, so better to stay sidelines or avoid this counter, because in such market where we are witnessing outperformance, and this counter is having a very reversal kind of a approach, so better to stay sidelines or avoid this counter. If it is near the cost, better to exit and look for opportunities in decent fundamental companies.
Okay, that's the view then. But what is the view on Devyani International? There's a query coming in from Kishore, and he wants to know whether it should be held or should he exit at the current juncture. Today it's down somewhere around 1% or so, but in the last 5 sessions, it has seen good traction, 12% higher. Should one look at booking some profits?
See, overall, this counter is into a very strong movement, because we are witnessing a very strong vertical move in the recent 3 to 4 trading sessions. And on the higher end, it is having a very strong resistance around the zone of 222 to 225. So until we see a decisive breakthrough above 225, it is advisable to stay sidelines. If someone is obviously having position, then maintain a stop loss of around 208 on the spot zone. And from here onwards, if there can be a further correction, then this counter can see some kind of corrective move towards the zone of 195, which again will be providing ample opportunity to accumulate this counter. So for the time being, it is advisable to keep a stop loss of 208 and wait for this counter, that whether it will be giving a fresh breakout above 225 or not. If not, then exit around 208.
All right, that's the view on Devyani. Hope that answers your query. The next one's coming in from Satya CK, wants to know your thoughts on New India Assurance. He wants to know whether he should average with a 1-year time horizon. His entry point or buy price was for his current holding at 256. Should he average for 1 year now?
See, overall, this counter is having a very strong base setup around the zone of 220, 225. So currently it is hovering around the same zone. But if I have to say about the overall movement, then from November month, this counter have not seen a very strong upsurge in the short-term period. So I expect that it is the consolidation zone. 220 is supposed to provide very strong cushioning. On the higher end, 270, 280 is a very strong resistance. So yes, one can definitely accumulate even at current levels or 10 points lower. But on the higher end, 275, 80 is the zone where one should try to book some of their profits. Again, if there will be a breakout, then one can start accumulating this counter above the zone of 300.
Okay, just a couple of more queries then. Let's take up a query on GRSE and data pattern. This query is coming in from Anunay. He's saying that he holds GRSE and data pattern with 25 and 30% loss. What should he do? Should he average, hold, or book loss? What would you advise?
See, overall, I think majority of the people have started accumulating this counter because of the FOMO. So from higher ends, there has been a decent correction in GRSE from the zone of 2800. It has came down to 17 or 1800 odd levels. But on technical front, there has been a 50% retracement that has been seen of the rally in this counter. So from here onwards, there can be some kind of consolidation around the zone of 1700 or 1650 odd levels, but one can stay put in this counter for medium to long term perspective. For short term, such kind of vertical movement might not come, but overall for a gradual or medium term time frame, definitely one can stay put in these investments.
Okay, well, with that, we've come to the end of the query segment. Osho, before I let you go, what would your trading picks be for today?
See, there are various counters which are looking very positive to me. First one that I am very bullish is Indian hotels. Indian hotels have seen a very strong breakout post 700 odd levels and has started gaining traction even in the last trading session. And today it is approximately on a subdued note. So Indian hotels is first pick that I will be recommending for from a buying perspective around the zone of 710, and on the lower end it is advisable to keep a stop loss for Indian hotels around 695, and 740 is the target for short term perspective. The other counter which is looking very positive to me is from the realty space. Oberoi Reality has given a very strong breakout, so one should try to accumulate this counter. 1890 to 1900 is the zone where one should try to start accumulating the share. While on the lower end, I am expecting 1860 to provide very strong support. So 1860 should be kept as a stop loss for short term trader, while on the higher end, near about 1970 is the target for short term.
Okay, those are the recommendations coming in from Osho. With that, Osho, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Look forward to interacting with you again sometime soon. Have a good trading day.
Thank you so much.
Well, on that note, of course, looking at the market, I think we are off opening lows. We are back above that 25,900 mark. In fact, just about looking to break into the green. But of course, let's bring on board our next guest for today. Joining me is Raj Vyas, who's the VP Research at Teji Mandi. Raj, welcome to Opening Bell. Thanks a lot for joining in this morning. Pleasure having you here. But looking at where we are at right now, in terms of the index, where do we go from here? I mean, whenever I ask our guests on the show as to, what is it that could lead to a correction now? What should people who are waiting on the sidelines really do now? I mean, they are actually left with no answer because there doesn't seem to be such a big negative trigger that could, bring about a meaningful correction at these levels. So where do we really go from here, and what do people sitting on the sidelines do at these levels?
I guess the people sitting on the sideline should invest only because one should not time the market because no one can actually predict what is the market has made the top, and from here on the market is going to fall and then will accumulate some of the nice stocks in our portfolios. But because overall the market sentiment both globally and both and locally is very much strong. If you see post the US Fed rate cut, the China has also cut its interest rate, and the Asian markets has responded positively, and the US markets post cutting the interest rates, they have also performed on a like they are performing very well and are on a positive trajectory only. And back home in India. The sentiment over here on the macroeconomic indicator wise are very much positive, be it your GST collections, be it the inflation control which we are seeing. I guess for the second time in a row, the inflation is below the RBI's guided band. We are seeing manufacturing pace picking up space. So there are a lot of positive both locally and globally. So we don't believe that the market is any which way is going to correct somehow like two three we could see some bit of corrections, but not a drastic corrections that everyone are anticipating. And I guess if you one should not time the market because if you go back in the history and if you miss the best 30 days of being in the market, then your returns will fall from 30 times to 3.5 times. So it's better to remain invested in the market.
Okay, in terms of sectors that are doing well, I mean there has been quite a bit of a sector rotation also at play, right? Because PSUs have now taken a back seat. Private banks have just about started performing. IT has had a fairly good run, but now witnessing some profit taking. Where should one really park their money now? Because PSUs, although they've had a very good run, they've come off 40 to 50% from their all-time highs as well. Would you look at that as an opportunity to get in? Do you think the dream run, or do you think the dream run is done and dusted for now?
Yeah. So in every bull cycle, if you are aware, there are some sectors which bounces back, and there are some sectors which are not performing well. So in the past many years, we have seen a lot of PSU stocks which are not performing well have started to perform well, and that is because they had already fallen below very much COVID levels. So that was the entry point, and from there on, we have seen a stellar move in the PSU basket, right? And as you mentioned, right now we have seen a small bit of like up move in the PSU basket, but the advice will be to stay away from the PSU basket in the near term period, like maybe till Diwali, and uh, stick to large cap like stocks, because they have not performed very much in the recent months, and they are started to the upward trajectory. What we are seeing looking at the screen is pretty much positive. So the advice would be to go from PSU to large cap names, and also it depends what is the actual time horizon of the investors. As I mentioned, for the near term period, they can switch to large cap companies from the PSU basket, and from the longer term period, like if they are like 2 3 years down the line, then I guess one should definitely see the nuclear power sector, which we believe is very much positive. Globally, if you see, there are private banks which are uh, talking about nuclear power, and in India also, the government has set a certain target till 2027 or 2030, that we will have to have nuclear power in our country in terms of megawatts, right? So in these, we believe KSB pumps, then we have HCC, we have Tata Powers. These are some of the stocks which are uh, having their portion in nuclear power energy as well. So we believe from a longer term horizon, the nuclear power is something the investors could definitely look into.
Right, and what are the emerging themes that you would be looking at? Of course, you mentioned power as a play, but of course there's
Yeah.
NTPC energy as well coming up with an IPO pretty soon. But aside of
Yeah.
this, of course, we have semiconductor plays as well, right? Because of the pact that India has signed with US recently. So within the whole green energy and emerging themes like chip factories as well, anything that you would look at right now?
So overall, right now the theme is into broader play. So we have we are very much positive on the e-commerce play. We are positive on the FMCG play. We are positive on the manufacturing side as well. But the point is, we have to look onto which stock will be performing from here on. So if in the past many years we have seen each and every stock, like those were not having the earnings potential, they were also moving in the upward trajectory, right? And they were also they were not getting the results. Their earnings are not positive, but then too also the stock was performing well. So from here on, you will have to see which companies are having the earnings potential. As you rightly mentioned, the semiconductor play, we do have CG Power, which has in terms of partnership from the global entities, they will be putting in some 7,500 crore in the next 3 to 5 years down the line period. So they are actually manufacturing and building the semiconductor infrastructure setup in our country itself. So we have CG Power in our fund as well,
Hmm.
and we are positive on that stock. And as I mentioned, we have a positive outlook on the FMCG play, the e-commerce play, the Zomato. So these are the themes. The theme is
Hmm.
the broader play. Now from here on, you will have to pick stocks which have the earnings potential.
Right. So, in terms of earnings potential, where do you see IT in the second quarter? Because first quarter, the expectations were so
Yeah.
low, but most of these companies surprised on the upside, and then we saw a very smart rally coming in IT shares as well, right? But now with the Fed cutting rates, Of course, it will trickle down to improvement in demand and then subsequently on numbers from subsequent quarters. But for second quarter in particular, what are your expectations from IT?
So basically, if you see the IT stocks has fallen not much because of the Fed rate cuts, but because there was some news regarding the Accenture dealing the employee salary by 6-7 months. So because of the demand concern, but we believe this is like a temporary shift in terms of correction, and one should definitely see IT sector as a whole, and a dip is actually a buying opportunity, because if you see historically as well, I have read somewhere, and it is pretty much similar what we have seen in our sheets as well, that 7 out of the 8 or 9 times post the US elections happen, the Indian IT stocks has like outperformed, and they have given significant returns to the investors as well. So, and if you see, we were having a chat with one of the top four major IT companies CFO. So what he mentioned is that uh, the demand scenario is a little bit weak, but it will improve from the second half of FY25 onwards. And so this is actually the time to buy the dip. If the stock is falling, you can gradually accumulate the stocks and see how, the returns that will be compounding over the next in the second half of the FY25. So, because if you see the attrition rate has fallen, the demand is slightly picking up. It's based on some other reasons like Accenture I have mentioned. Because these reasons, the IT stocks are impacting. But overall, the demand scenario we believe is improving. The deal wins that the companies are getting is positive, and overall the performance, if you see both the large cap and the mid cap IT stocks, they are actually improving quarter on quarter and both on a YY basis as well. So any dip, I guess one can accumulate for a longer term period. And as I have mentioned, post elections, the IT sectors have actually outperformed. So it's better to accumulate IT stocks at this point of time.
Okay, better to accumulate IT stocks at this point. Lastly, how are you really playing this whole premiumization theme? Because there have been quite a few launches when it comes to premium bikes. Andhra has also, green given approval to its new liquor policy, and even in terms of luxury realty. I mean, whatever it is, the market is fairly under penetrated, right? When it comes to the entire premiumization theme, how would you look at this, and how should one play this theme?
So, like if you go back in history, every festive season, if you see the demand in terms of consumption, in terms of auto, in terms of jewelry, all these the stocks in all these segments have actually performed well. And if we compare tier one with tier two, so actually the premiumization is picking up in the tier two and tier three space as well. Because if you see the over there, the as you spoke about the auto sector, right? So the two-wheeler demand over there is pretty much higher than compared to in tier one, because in tier one we have like basic necessities as auto, we have the BST buses, we have the railways, from where we can commute from one place to another. But in the rural segment, the only mean of transportation is if you have your private vehicles. And if you see, the private vehicles are very much higher. Suppose, for example, if you have 5 persons at your home, like three or four, you will see 3 to 4 two-wheeler vehicles parked in their houses. So that is the kind of demand that we are seeing in the rural area, that is tier two and tier three. And actually, because of the technology and because of this like online thing, that the people over there are also much like they can also buy things which the guy can buy from tier one cities as well. So they are like into more into premiumization, they are more into autos, like they want to buy new stuff. And the consumption demand which we will see will start from the tier 2 and tier 3, and then it will move towards the tier 1. So the premiumization, as you said, is definitely picking up, and we will see this theme starting from the tier 2, tier 3 segments.
Okay, that's the view then. With that, Raj, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Look forward to interacting with you again sometime soon. Have a great day.
Thank you. Same here. Thank you for having me on the show.
Thank you. Thank you. Well, with that, good news from Dalal Street. We've hit a fresh high, although 26,000 is still some time away, 40 points away, so to say. But the Sensex has managed to hit that 85,000 mark for the first time. Nifty as well surpassed yesterday's all-time high of 25,956, and we are somewhere around 25,964 as we speak. That's a new high, and as I mentioned, Sensex as well has hit that crucial 85,000 level. So yes, we are resuming our upward move, but it's just a matter of time when we manage to hit that 26,000 mark on the Nifty. Whether it happens, just in just a few minutes from now or around midday, or whether it happens at all today or not, is something that we'll watch out for. But of course, we have, recouped all of those opening losses and are now trading firm at record levels. So that's the news from Dalal Street. But for now, it's a goodbye from us. Thanks a lot for tuning in to Opening Bell. Of course, stay tuned because we will be back with Closing Bell at 3:30 p.m. And in the meantime, log on to moneycontrol.com and stay updated with all the latest happenings in the world of business and markets. Have a great day and see you later.